If we were to believe Elon, that's great news. Twice as many cars produced. It's a buy, right, Jed?
Well, if you were to believe them, you'd believe that they were going private at $420 per share as well. So, I think we have to, at this point, take a little bit of, there's been a history of promotions from Elon, and take that with a grain of salt.
So then why do you think it's going up to beyond the 300s? We're at 276 now, so that's not a huge upside, but you do think that's the direction we're headed?
I think that, on Friday, it was a pretty bad day where we had, a viral video of him smoking marijuana circulate. And more importantly, other than those antics, were really the departures of, one key C-level figure and another senior executive. And so, you probably had a bit of an overreaction, and you saw Elon put some water on this latest fire, and that's probably what we attribute the movement to this morning.
Jed, I want to talk about going forward, because on the last earnings call, a lot of the whole reason he said that he was public and wanted to stay public is that the profitability and cash flow was going to turn positive by the end of the year. I have a chart in my terminal, I don't know if you can see it, GTV Go here, that talks about the cash flow. Where do you see them going forward? Can they be profitable and cash flow positive by the end of the year? Are they meeting those targets?
So turning cash flow positive is really a function, all else equal, and assuming that the Model X and Model S stay relatively consistent in terms of those trends, which have been for quite some time, then it really comes down to the Model 3 production. And that's where you need to hit, assuming a 30% margin, and we're in the mid-teens right now for the Model 3, but assuming we get to a 30% margin, then you need to hit 5,000 units per week. And that's why everybody's focused in the financial community around that 5,000, which would be about 60,000 for the quarter. This quarter, we've trimmed those estimates. We actually are a little bit below consensus, and we're at 48,000 is where we think that it'll fall.
Can you give us an update on how that SEC investigation is going? I know that some analysts had said that it was just going to be a fine on Musk. It wasn't going to hit Tesla as the company. Any update from what you're hearing, and how concerned are you? How much can you price that risk into your thesis when you take a look at the SEC and some potential investigations into Musk and or Tesla?
Sure. I wish I could. I don't have any insight into the SEC investigation. But what I could tell you, and this has been a point that we've really hammered home, and what kept us from becoming more positive on the name, is all of these things that are surrounding Tesla, all of the antics, all of these what we call self-inflicted wounds, we think are raising the cost of capital. And as they come into some debt that needs to be refinanced that won't be able to convert, that cost of capital is going to start to become a much more important role. Is that can, on a cash-intensive business like an automotive manufacturer, that can really make the difference in terms of how successful you can be. And that's where our greatest concern lies right now.